the late planted crops and now a late harvest concern you at all?
Well, we are quite a ways behind, and there's certainly some big areas out there that are lagging in maturity, which is a big concern with this weather front moving through. But as we've kind of noted here over the past several weeks and really over the past couple months, the lack of demand has really trumped the production concerns, and that continues to kind of keep the lid on anything. If we can't stir up demand at these prices, it's probably going to take lower prices. Now, ultimately, we do think that production will be walked back more, and that will be, I think, encouraging for the market and probably encourage more short covering from the funds. And in the corn market specifically, that's where the funds have been lagging in covering those short positions. They've been kind of establishing a net long in soybeans and even the wheat market. But corn a laggard, and I think a large part of that is demand. If we start to see demand pick up, I think that could certainly help the momentum take out upside resistance. And as far as resistance go, 398 to 402 is obviously psychologically significant, but also technically significant with a key Fibonacci retracement in the 200-day moving average. Prices here this morning testing near the low end of the range, 377 to 380. There was a lot of interaction here in terms of volume between the bulls and the bears. This represents a breakout point from that quarterly stocks report on September 30th, as well as support on that October 10th USDA report, 50-day moving average and key Fibonacci retracement. This is a must-hold pocket on the support side through the rest of the week.
Well, right now, that December corn contract is up just 1 1/4, trading right there about that 384 mark that you were just talking about. Soybeans today, they're basically flat, not much going on there, and that harvest is just kind of getting closer to the edge, but it's still behind in some of those areas.
Still lagging, and I think the beans overall have been a little bit more optimistic. We've seen demand pick up, which is nice. We're seeing the trend of higher lows and higher highs continue, kind of stair-stepping higher. The ace in the hole or the kicker continues to be trade with China. Nothing substantial has come of that. We've seen a lot of positive headlines over the last year and a half with not a lot of substance, but there is another meeting right around the corner in Chile where the leaders from China and U.S. will be hoping to sign a phase one deal with some ink to it. Now, I'm not holding my breath for that, but the optimism going into that should at least offer some support to the market. Obviously, we've got kind of a big report here, not this Friday, but the next Friday, and by the end of the week, I think that's where the attention